every $4,000 increase in the price of gold would give the Treasury general account 1 trillion free and clear. Here's how it works. It's already at 4,000. So he was right, if Rickards was right, 4 to 24 is 20,000. Every $4,000 increase gives 1 trillion free and clear to the Treasury. That would be $5 trillion. How does it happen? President would say to the Treasury Secretary, revalue gold right now. Treasury Secretary would tell the Federal Reserve, revalue gold right now. No congressional approval needed. They revalue gold at 24,000. The Treasury issues gold certificates to the Federal Reserve. The Federal Reserve has claim on the cash value of the gold. They do not have claim on the gold that belongs to the American people. Here's the accounting gimmick. The Treasury goes, or the Fed goes, bink, and prints $5 trillion just like that. Gives it to the Treasury valuation account. It has been revalued 3 times in the United States, in 33 when Roosevelt did it, and in 72 and 73 when Nixon did it. Nixon closed the gold window in 1970 or 71 at $35. In 72, he devalued the dollar by like 9% and revalued gold to $38. In 73, he did it again, revaluing gold to $42.22, where it stayed since then on the books of the U.S. government, right? James Rickards says, and he's been called to the Pentagon to simulate war games. He says, my number's 24,000, and he uses the M2 money supply into the gold supply. Now, real quick, before I jump off of this subject, every $4,000 increase in the price of gold would give the Treasury general account 1 trillion free and clear. Here's how it works. It's already at 4,000. So if he was right, if Rickards was right, 4 to 24 is 20,000. Every $4,000 increase gives 1 trillion free and clear to the Treasury. That would be $5 trillion. How does it happen? President would say to the Treasury Secretary, revalue gold right now. Treasury Secretary would tell the Federal Reserve, revalue gold right now. No congressional approval needed. They revalue gold at 24,000. The Treasury issues gold certificates to the Federal Reserve. The Federal Reserve has claim on the cash value of the gold. They do not have claim on the gold that belongs to the American people. Here's the accounting gimmick. The Treasury goes, or the Fed goes, bink, and prints $5 trillion just like that. Gives it to the Treasury. What does that do to the dollar? Devalues the shit out of the dollar, right? What do they do with that $5 trillion? Whatever they want. Start to pay down their debt. Maybe not issue 10-year treasuries for a while. They start to work down the debt and devalue the dollar, right? Because we want to pay down the debt and water down dollars. We want to bring back manufacturing. So we're not quite there yet. So we got the Genius Act that's providing the synthetic demand for the Treasury when no one's going to want to buy it when we're this fiscally irresponsible. And it's buying gold with the interest that is not transferable to the holder of the stable coin.
That's right.
So the gold goes up, dollar goes down. Maybe we revalue gold at some point. When would that some point be? Well, maybe it's July 4th, 2026. Why do I say that? Judy Shelton has been on my show twice, once with me, once with Michelle McCory. She's written a book, best-selling book called Good as Gold. She was Trump's nominee to run the Fed in 2016. She wasn't confirmed due to partisan politics, but remained an advisor. She said on my show, people can go listen to it on Miles Franklin Media on YouTube. Andy, in no uncertain terms, Trump has told me the following, that July 4th, 2026 is a massively important day for him. It is the 250th anniversary of the country, and I believe he is going to peg gold to the back end of the bond market. What? Yes, to the back end, right? She's in her book, it says 50-year first, 30, 20, 10, and maybe a 5-year treasury redeemable in gold. Now, the 50 years, she said, would probably have a 1% interest rate attached to it. And she said all of these gold bonds stable coins would be issued off of those too, to give more energy to the rise in gold and to run the treasury. But she said 1% on the 50 and 0% on the rest, but redeemability of gold. So let's go back. And so the gold starts to rise. Maybe they revalue it, maybe they don't. He pegs it to the back end. You got the front end covered through synthetic demand through the stablecoin passage. The back end, how do you get demand for the bond market to finance our debt? But there's a bigger piece to it as well, and that is you peg it to gold so that the redeemability is in gold, not in interest rates, meaning the more stupid we are with fiscal and monetary policy, the higher the price of gold goes. So if you have a $20 million bond redeemable in gold, by the time in 20 years, maybe that gold is way higher and you only need a handful of ounces to 1 ounce, or 100 ounces or 1,000 ounces to pay it back instead of what it would be today. Price goes higher, 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 higher. The bond is redeemable in gold. But what would that do? What that would do is allow you to bring back manufacturing at zero upfront borrowing costs. Zero. There's no coupon. You bring back manufacturing, you build the facilities, you train the people, and you let gold continue to go up through the stablecoin issuance and through the revaluation to back the back end of the bond market. Redeemable in gold. Now let's put it all together. You have the ability, if you do this, to keep interest rates low, to keep the value of the dollar completely falling, in essence, defaulting on the reserve status, to support the bond market, to bring back manufacturing so that our children and our children's children have a future. If not, there's only two ways out of this: hyperinflate or default. The third option is grow your way out of it. Well, how the hell do you grow your way out of it if you make nothing and your populace is stupid and you are massively in debt? You are becoming third world. You're in big trouble, and AI kneecaps all the jobs. So you bring back manufacturing through relinquishing of the reserve currency. That's exactly what Vance said. That's exactly what Jared Bernstein said. Stephen Mirren, who is the architect of the Mar-a-Lago Accord, where did he end up? Oh, that's right. He ended up in the vacated spot at the Fed a few months ago. He was Trump's advisor. The whole theory of the Mar-a-Lago Accord is to devalue the dollar to bring back manufacturing. Now, he puts a greater emphasis on Bitcoin than he does on gold. And guess what? Tether has 7 or 8 billion in Bitcoin as well.
Yep.
The continual purchasing of Bitcoin and gold will devalue the shit out of the dollar, which will make selling your products to the rest of the world acceptable. You can do it. And the only way you can bring back manufacturing without bankrupting the nation is to do it at zero upfront borrowing costs, redeemable in gold. But gold keeps going higher, 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 higher. Every time the dollar moves, gold's going to go higher. So my theory is he's trying to bring back manufacturing at the expense of the U.S. dollar to support the bond market, to support bringing back manufacturing. Now, what is the drawback of all of this? Universal basic income. It will happen because shelves will be empty for a while, prices will be much higher, people will have a hard time making ends meet, but he'll stand up on stage. I could see him doing it and say, listen, we have no choice. We kind of are at the end of the road on the dollar. And if we don't do this, there's no future for our kids and their kids. We must be the leaders in manufacturing again. And there is no way to do it unless we just let go of the reserve standard and we find a way for people to want to buy our treasury debt, not run away from it. And the only way to do that is to make it redeemable on a blockchain network, to see it redeemable in gold at zero upfront borrowing costs. Even Donald Trump's son, on a ad for a competitor of mine, I think it's Birch Gold, he in the damn ad says, my father is prepared to revalue gold. He says it right there. I think they will revalue it. And it's not such a conspiracy theory. As I said, it's happened many times before. Now, who else would it benefit? How about every central bank on the planet? They've all been buying. Are they going to bitch about it? Probably not. They're the ones that will benefit from it as well. In essence, the bottom line is this: 3 things. 1, you save in dollars, you're destined to go broke. 2, you are not a contrarian, you're a victim. 3, every single country in the world, I believe, will start to trade their own currencies and use gold as a settlement structure, whether it be for trade or currency imbalances. And the dollar as being the world reserve currency, the days are numbered. The dollar's not going to die, but its role as being the reserve currency is. And I think that's by design, and in effort to create demand for the treasury, redeemable in gold, so you can bring back manufacturing at zero upfront borrowing costs so our country has a future. Because if we don't do that and we are broke, insolvent, uneducated, and AI is going to take over, what do we have left if we don't make anything? Got to reset the game and start by being the engine of ingenuity and production and go from there. And maybe we have a future at that point. If not, it's hyperinflate or default and then reset as a result of it. I mean, India take possession of over 800 million ounces of silver in the last 4 or 5 years. China, the second largest producer of silver in the world, is flying all over Latin America, in particular Peru, the number 3 largest producer, and Mexico, the number 1, and buying doré and concentrate, which doré is a bar that the miners would crudely refine 30, 40, 50, 60%, whatever the number is, and then they send it to a refinery to be fully purified. concentrate as a byproduct sludge of the mining process, like a goo. Well, they're coming in and they'll buy all of that up. They're the second largest producer in the world, and they're flying to Latin America to buy this stuff before it's even called silver, paying double what the West will and shipping it back to refine it themselves. You look at Saudi Arabia, they just bought several $100 million worth out of SLV. And SLV, well, the amount that they bought allows them to stand for delivery. You look at Russia, they're adding it to their strategic stockpile as a government. No one has ever done that before. So you're beginning to see silver take on a very, very prominent role, and they're standing for delivery. That's part of the reason that the LBMA, which is a T+1 settlement, is T+8 weeks, because it's very obvious that the Bank of England doesn't have enough in the way of trucks or manpower to move your silver for your massive jewelry operation or whatever people need that metal for. And, a lot of this happened by the threat of tariffs. We're going to tariff. And so the banks who were lined up west, the US and the European banks, there are some interesting theories out there that maybe Trump is going after the European aristocrats and he's trying to stick it to the Bank of England and the banks that are very short there. There are a lot of things, Tom Luongo talks about this, that would point to that being true. Now, I'm not saying I believe that. What I'm saying is, if that were the case, Trump says it's all tariffs. So the banks say, listen, we got these short positions on COMEX, Bank of America, JP, Goldman, Citi. Listen, when they go short on COMEX, typically a bank, they will go on paper, which drives the price down. Yep. To offset their books, which doesn't affect the price. They'll go long in London, right? Now their books are neutral. Listen, guys, we need the silver back because of this tariff crap. Don't worry, it'll all flow back like it always does, goes back and forth through something called exchange for physical. We need to write our books. So all this metal comes back. And I've been screaming since December, it ain't tariffs. It's reshoring. Yep. They are reshoring it for a strategic reason. They have screwed those players over there. That's what Tom Luongo would say. He says that the Europeans, in particular, the Bank of England and the old money,